What's up, traders? After yesterday's volume light rebound clawed half the Friday crater, today served up a wild gap-down opener on Trump tariff threats that had us all sweating, only for IWM to power through to fresh highs, while the rest mixed it up in true rotation fashion. Powell's midday Fed pep talk added some guardrails but didn't kill the chop, setting a tense stage with bank earnings looming. You're watching the Stock Market Summary Series, and as you guys know, none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it.
So the main thing really pulling the market around this morning was that fresh dose of U.S.-China tariff jitters.
Yeah, that news about Trump maybe halting cooking oil trade and then Beijing hitting back with sanctions definitely set a tone.
A messy tone for the open, for sure. And the technicals we saw from the main indices, well, they were kind of all over the place.
They really were. What's fascinating, though, is seeing how the market reacted technically. You look at SPY, the S&P 500 ETF, it managed to claw its way back mostly. Closed down only, what, 0.12%? Pretty fine.
Yeah. But then you look at the NASDAQ 100, the QQQ, it sold off 0.67%. And crucially, it tested and got rejected right at that critical 20-day moving average resistance. I mean, that's a textbook technical signal right there.
Okay, right. A stall signal for big tech.
But
the small caps, I mean, they're telling a completely different story. IWM surged 1.43%, a new all-time closing high.
Exactly.
So if QQQ is hitting resistance, shouldn't we maybe worry that this IWM breakout is just, a short-term trap? Or does this split actually confirm that rotation play we talked about last week?
No, I think this divergence absolutely confirms it. Money is actively moving. You can see it shifting out of that tariff-sensitive high beta tech and into more defensive or like domestic-focused plays. Look at the sectors. Consumer staples, XLP led everything up 1.61%. That safe haven bid is holding firm.
Right.
Meanwhile, tech, XLK, lagged hard, down 1.28%. Got hit by those tariff-sensitive semis, the big AI names pulling back. It's not just random noise. It's a calculated capital shift, I'd say.
And that shift kind of brings us right to our watch list setups. We're keeping an eye on NuScale Power, SMR, that small modular reactor company.
Right.
It just eked out a small gain today after breaking that symmetrical triangle yesterday. The fact that an infrastructure name is trying to push higher just as tariffs hit tech, it fits the narrative, doesn't it?
It does, perfectly. And we're also still watching QBT, quantum computing. It's coiling up in that big ascending triangle pattern.
Okay.
Now, in volatile times like these, especially with tech looking weak, you got to watch these setups really closely. Is it going to be a high volume breakout, or is it setting up as, a classic bull trap fake out?
Yeah, I got to have your levels set.
You absolutely need defined risk parameters for both outcomes. Managing that risk, spotting these technicals, that's key.
Right.
And stepping away from the charts for a sec, Fed Chair Powell spoke today and gave a keynote at NAB in Philly. His comments were pretty important, I think, for kind of tempering some of that morning volatility.
What was the main takeaway there?
Well, he stressed the Fed's juggling these dual risks, the potential for stronger growth, but also the rising downside risk to employment. And he tied that directly to tariffs and reduced immigration.
Okay, so he's basically signaling the labor market is the bigger worry right now, which I guess keeps those October and December rate cuts firmly on the table.
Correct. That's the read. But, because we're still waiting on those delayed September jobs and CPI reports, the market is really trading technically right now. It's not reacting much to new data because there isn't much definitive new data.
Makes sense.
So days like today, where you literally see QQQ reject its moving average while IWM breaks out to new highs. They're perfect examples. They show why spotting the technicals, confirming with volume, setting tight risk caps, it's not optional. It's essential stuff.
Yeah, absolutely.
And, sharpening that skill, developing that technical eye, that's exactly the kind of thing we work on in the Grok Trade Mentorship program with that one-on-one coaching.
As always, guys, if you've got a stock you're watching or question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe, too, so you don't miss a beat. You can always unsubscribe later.
And we got to quickly touch on crypto and metals, too. Crypto definitely felt that trade war stuff today. Bitcoin got slammed lower in the open, tested support.
Oof.
But it did rally off that long downside wick. Still closed down, 2.12%? And it's now sitting pretty decisively below the 50-day moving average. That's a critical support break.
Yeah, that shifts the bias.
It shifts the short-term trend bias towards bearish, yeah.
Yeah. Meanwhile, gold, GLD, just kind of stuck to its script, right?
Yeah.
The reliable hedge, ground higher, 0.71%, extending those fresh records.
Yep, gold doing gold things.
But silver, SLV, actually blinked today. Dropped almost 1%, 0.97%. Kind of shows the limits of that flight to safety bid when the equity noise really ramps up, I guess.
That's a good point. Silver acting a bit more industrial or volatile there.
So wrapping it up, we close the day with some really clear technical triggers, don't we? IWM screaming rotation and relative strength.
Yep.
QQQ flashing that clear technical caution at resistance, and the whole thing underpinned by that geopolitical tension.
Definitely need to keep those technical levels tight overnight, especially with bank earnings coming up.
For sure. All right, everyone, keep those triggers tight. Have a great rest of the day, and we'll catch you in tomorrow's market summary.